Hello and welcome to another update video about Solana. Yeah, let's talk about the, let's say, short-term bullish and short-term bearish scenarios. Maybe we should first of all take a look at the bigger picture so that everybody has a good understanding of the overall context, because on the Solana chart, and as you might know, larger time frames are often more relevant, more, let's say, yeah, they are more relevant really to the analysis than the smallest microstructures. Currently, we're exploring the idea, obviously, that a wave 4 bottomed here on the 5th of August, that we're on our way up in a wave 5 to 370, 380, maybe even $490. We have to see how the subdivisions develop before we can really, let's say, fix these targets. They are moving targets at the moment. We can't lock them down yet. I can tell you that the move down from the March high looks like a correction. Yeah, so not like an impulsive move down. It looks corrective, which is also why my view is still that we should see one more high in this bull market. And I see the current sideways action as a wave 4, which means wave 5 can still happen. So there could be some more gains, yeah. But at the moment, the market has not yet committed to an upside breakout. Why do I say that? Well, let's just look at this. You know, we are still moving sideways. Bitcoin is already at the top of this range. Solana not yet. Okay, so Solana hasn't yet committed that this correction is over. Solana could still, in a bearish scenario, let's call it short-term bearish, move down lower into this support area from where it could attempt another rally. This move to the downside, of course, is possible. We have to talk about it, because what happens, you know, if we break below the lower boundary line of the channel there, first of all, if we break below $119, which is an important support level, then break below the lower boundary line of that red trend channel, of this corrective price channel, you know, what would happen? Well, we would probably pay some attention to that lower orange support area, specifically the area of a previous swing low, which was located here around $78, and then around $72.50 for an extended wave 4. We have here the 38.2 retracement, which is often an ideal target for a fourth wave. At the moment, the market is holding above the 23.6 Fibonacci retracement, and that level is key because this is sort of the first key support for a fourth wave. Overall, I am watching for the start of the fifth wave. Again, the market hasn't really clearly committed, so we're still holding in this sideways range, and I would need some kind of a break above, I would say, first, that sort of $162 level. You see all these previous swing highs for an indication that we're actually moving up. So at the moment, you can see that here, how nicely we are holding just below these. And we even have a, let's say a parallel price channel that we've drawn on the smaller time frame that indicates also, you know, that this is just a sideways range at the moment. You could say a range in a range. And we're just watching for first signals of an upside breakout, okay? So now that you know the overall context, which is bullish, we can take a look at the smaller time frame, where we can talk about the short-term bullish and short-term bearish potentials. Essentially, the wave counts here are not so important. What is more important is the Fibonacci support zone below, micro support, or let's just say support for this range, between $134 and $119. So you see this is a support area, which is a support area for the yellow bullish wave 2. So let's talk about the bullish scenarios first. In one scenario, so in the bullish case, you know, we would assume a wave 4 bottomed on the 5th of August. Then this is a wave 1. And then there are two bullish potentials I can see. So the first one is that the wave 2 bottomed here on the 5th of September, 6th of September. If this is the case, then the move to the upside is obviously a third wave. So we have a 1-2 setup. The third wave would be most likely then, it would have, so this entire move up would have to be some kind of a diagonal, because while wave 1 you could get away with calling that an impulse, that move up is not impulsive, okay, from the 6th of September low. So I could call it maybe an A wave, a B wave down, and then a C wave up. If it breaks out to the upside and sustains above 162, this is the way to go. We would call that the green scenario with a green wave 2 labeled here. And then we're already in the third wave. This is a direct bullish breakout scenario. This is what I would probably follow if the market can break above initial resistance here and break above 162 and above the upper boundary line of the trend channel. A short-term bearish but still bullish scenario would be the yellow count, where we say, okay, yeah, bottomed on the 5th of August, wave 1 to the upside, then W, X, Y. And in the Y wave, this is an A, B, C structure. Absolutely possible, plausible. It would simply mean that the price could test support again before it reacts and moves higher. So essentially, this between green and yellow, it's all about, okay, do we test support again? And this is definitely still possible, and especially as long as we're holding in the range, I think also highly probable. What we need to see is a first breakout above $162 for an indication that wave 2 has actually really bottomed, because the rally was corrective. I find a test of support very likely, but it surely will depend to a degree on Bitcoin, which is currently doesn't showing any sign of weakness. So Bitcoin isn't showing any sign of weakness. Now, bearish count would be the blue count, in which the wave 4 never finished, as I just showed you on the larger time frame. Yeah, and we're moving down in a 5-wave pattern. So in this scenario, this is, however, a diagonal pattern where we say this was a wave 1, this low in September, a wave 2 corrective rally, but this count has problems. And as long as we're holding support, I tend to give the bulls the benefit of the doubt. But the blue count is possible. And if we break below 119, which is below the price channel's lower boundary, and then, follow through to the downside, this would be the count to go with. It would be a diagonal pattern to the downside. It's quite messy, but it can send us down into that mid $70 region. But overall, at the moment, we're in a range and the market hasn't committed to any of these counts. We spend a bit more time in the upper, let's say in the upper half of that trend channel, could indicate some bullishness. As I said, I'm giving the bulls the benefit of the doubt. Whether we test support once more or not is more like a question of how's the market feeling really in the short term. It's not really changing in any way the structure. But overall, as long as we're holding $119, the bulls still have a chance to generate an upside breakout. And the $162 level is key. That's the update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.